Flagship Minerals ASX FLG on the Australian Stock Exchange is a junior explorer with a progressive asset offshore. And joining us to talk about that right now is Managing Director Paul Locke. Hello, Paul.
Hi, Tim. Good to be here.
Great to see you again, coin a phrase. You've just finished 2 days at the conference on the Gold Coast, and coincidentally, you have a gold project in Chile called the Pantanillo. Can you please briefly outline that project for us?
Yeah. So we announced the acquisition of Pantanillo in mid-April, and this is a project that was originally held by Anaconda. Anglo picked it up in the 80s, I think, and held it all the way through to the late teens. And then they let it go, and it was picked up by a Chilean group, private group, and we did a deal with them. So the great thing about it is, the saying, one man's trash is another man's treasure. Well, for Anglo, it was too small. It's got 1 million ounces in it right now. Pit shell constrained. 80% of that's measured, 20% indicated, and NI 43-101. A heap of drilling. So when we originally secured it, it was split from the data held by Anglo. And a couple of weeks ago, we finalised a deal with Anglo on the data, so we've rejoined it. And being Anglo data, it's really good, high quality data. There's 33,000 meters of drilling. There's over 100 tons of core, pulps, soils, all this stuff that we can go back through. There's geophysics around the actual resource. The resource is based on 70 holes. There's an additional 30 holes attached to the drilling, and 14,000 meters of diamond drilling. So it's absolutely.
It's a significant amount of data, and I guess that's going to really fast track your transition from a 43-101 resource to a JORC compliant resource, which makes it a lot easier for Australian investors to understand.
Yeah, but you know that they're essentially the same. And in my discussions, many investors are comfortable with it, and a lot of Australian investors actually invest in TSX companies. So there's not too much of a hurdle about that. But we are talking to the QP, the original QP, on the data for the NI 43-101. That person's a CP under JORC. And conversion, given the quality of the data, conversion to JORC will be simple. But here's the kicker. This resource was cut in 2010 on a 0.3 cutoff and a gold price of 1,035. The resource cutoff now in our neighbourhood is 0.15, and we've got changed economics. So there's the economics are far more attractive today. So we expect to bring in a lot more ounces when we upgrade or change it to JORC, and also change the stats around the actual pit shell.
Some people may say that you've just picked up a desktop study, but you've taken, as I understand, excuse me, you've taken actual drill core that was done some years ago, and then you've put that through an assay process, and you actually have numbers on the resource right now.
We have the original drill core and all the original assay data. The original drill core is held by Anglo in Copiapo, and we're just organising a warehouse, our own compound at the moment, when we'll shift all this gear over, plus a lot of digital data. In fact, there's over 1,000 files associated with the project, and they range from data directly associated with the drilling right through to soil assays and estimates on resource sizes, and a lot of workings like that when they originally were looking at the project. And there's some pretty good info in there.
And you're not a lone player in this area. You have some significant. You're in the Maricunga Gold Belt. Obviously you're going to have players there, but you've got some major startups happening around you. Please tell us about those.
Yeah, well, do you mind if I jump into a slide? Two slides actually, and that'll give your viewers a good feel for what we're doing.
Absolutely.
So, yeah, yeah. Okay. So what we see here is here's Copiapo, and in this little insert, this is where we are in Chile here. And the gold background, appropriately coloured, is the Maricunga Gold Belt. And this is where we're focused. But in this slide, I'm also trying to help viewers understand where we are. So we've got Filo de Sol down here. That's only, here's the scale just over here. That's only about just over 100 k's south of us. And then about 150 k's north, we've got Salares Norte Goldfields. It's quite a high grade project up here. But what got us really excited, Tim, about this project is who is operating around us. So we've got, Barrick and Newmont's Norte Alberto, that's 27 million ounces, and I'll show you another slide in a minute. We've got Vulcan here and Phoenix, Rio 2's Phoenix project, which is in construction. And that's what got us excited because their CapEx was funded by Wheaton Precious. And my biggest concern is as we move forward into PFS, etc., the big question for shareholders is how do we fund this? And that is our one of our funding options, and we've already had interest from streamers.
Just jumping in quickly for a second there on Wheaton Precious, they're a royalty streaming investor, aren't they?
They are similar to Franco-Nevada. So, in fact, on this screen here, the Vulcan project, 12 k's from us, their PFS has been funded by Franco-Nevada so they've given them a US $15 million line. So that means that there's no dilution whatsoever, and that could be an option for us. So imagine that your whole PFS is funded on future gold streams, and there's no dilution. And then 35 k's north, the Phoenix project here, under construction. This is a really interesting project run by Alex Black. They'll be producing about 92,000 ounces for years 1 to 12, so 92,000 ounces per annum. They've got room for expansion. It's quite a large project. And their all-in sustainable cost is $12.37, but they're trucking water from Copiapo. And so in that $12.37 is $200 an ounce or thereabouts for freight for water. So these projects are really robust. And then we've got Pantanillo here at 1 million ounces at 0.69 grams with a lot of upside in it. So it's pretty interesting. Phoenix and Rio 2, they've cut the path for us in a way because they've just gone through their whole environmental processes and permitting processes. So we will learn a lot from them. And then when we jump to the project, while I've got the screen open here, I'll jump to the project itself. So the project is just here. This green area is a 1 million ounce footprint thereabouts. And then we've got the Hochschild's Vulcan project here at 11 million ounces. In their mine plan, their heap leach pads are basically next to our project. So there could be some interesting opportunities there. So it's really robust.
Wow. So that it's on the table, the data's on the table, great neighbors. What's next in the process? So you apart from the JORC conversion, um,
Well, really, we're going through the data set. So we've released a few updates recently. So I might jump into a slide in a minute, but we've been going through that, and the data is really good, and it's producing good results. So really, we're developing an understanding of the project. We expect to have the JORC resource or MRE late November, early December. And that's where we will bring in additional ounces. So in between now and then, we'll be updating the market periodically on what is coming out of the database. And then once we have the MRE, basically we're at a fork in the road. And depending on the MRE itself, we will either look at doing some met holes, and that'll help with feasibility, or we'll look at expanding the resource. So we're aiming for 100,000 ounces recovered for 10 years to start with. That's enough to get a project going. And then we can start looking at the rest of the block.
You mentioned pit constrained, which is an interesting terminology for me, and I know you can't make any predictions about what you do when you remove those constraints. So you'll be producing an updated MRE in sometime later this year, actually quite soon now, because we're getting towards the end of the year with a deconstrained pit.
No, we would it would be pit constrained, and that we might be able to bring in a bit of inferred. So I'll jump into another slide and give you an idea of what's
Absolutely.
happening. So in this slide here, you can see the green line is the pit shell, and there's some drilling here. So we've got a lot of holes ending in mineralisation, which is really good. And you can see the block model here. So there's a lot of drilling, some really high grades in here, 144 meters at 0.81, we're 208 meters at 0.62, 170 at 0.7. So all ripper intersections. But to answer your question, we're looking at the oxides and mix zone. From what we can see, the pit pulls up short of the bottom of the mix zone, but then we've got a massive sulfide zone under it. And so there's a lot of resource here. And if I show you this slide here, this is our deepest hole. This hole is 700 meters or 600 meters vertical, ends in mineralization. So a big fat intersection, 296 meters at 0.56, and then from 404, including some really ripper intersections in there. So this is literally, well, in this cross section here, this is 450 meters below the bottom of the current pit shell at this part of the project. So, and it's in mineralization, so it's big.
So what would you say to people who are saying, well, grade is king, and sure, high grade gold is lovely to get, but we're sub 1 gram, and we know that a lot of the major deposits around the world are sub 1 gram. How do you speak to that?
Well, the way we look at grade as king is, can you just give me 1 sec and I'll get another slide because I've got a really good slide here for this.
Certainly.
Okay, so when we look at this slide here, Tim, and we get this question or comment a lot, grade as king, and this is a really interesting study. So this is Auramat Analytics, an Australian firm, and they produce a quarterly report with one of the broking firms, and it's really instructive. So you can go to the Aurum website and pull it down. And this is the March quarter for this year, and it's the Australia, New Zealand producers, so all the producers. And what I've done is mark two projects on the screen. We've got a Capricorn's Karlawinda, which is in WA. This is ranked number 35 by grade at 1.02 grams head grade in the March quarter. And by AISC, it's ranked number 5, so 13 Aussie 1390. So it's pretty low on the cost curve. It's actually the 5th lowest. So it's a really good project. And then here we've got Mandalay's Costerville. It's number 1 by grade, 9.6 grams a ton. So the highest grade in this peer group, and it's ranked number 2. It's in the middle of the 3rd quartile. And actually in this peer group of the 10 lowest cost projects, 6 of them are the lowest grade projects. So there's when we talk about grade, it's really about the geometry, the geology, and the metallurgy, and your cost environment, and that's what makes a project. If you've got 2 projects next to each other, you can say grade is king. One with a higher grade should be better, but not necessarily.
No, that's a fantastic chart.
Yeah,
And,
yeah.
it goes a long way to say large disseminated projects and porphyries, and where you have low grade disseminated through a large body of ore is a lot easier to mine too. You're not separating rock, you're processing what you've dug out.
Yeah, well, actually, and there's another on that slide. Uh, what I've done on that same data set is overlay the Hochschild project, which is 12 Ks from us. So they're PEA, they're targeting 330,000 ounces a year, and their AISC is 1,002. When this was done, it was about 1,500 Aussie. So it sits basically at the bottom of the Australia-New Zealand cost curve at 0.63 grams, and at 0.48 grams, Rio 2's Phoenix is in the bottom quartile and probably the bottom decile, just slightly above Cadia. So that just goes to show that these big heap leach projects, even at altitude, and these projects are, above 4,000 meters, are still kicking goals. They're very profitable, or will be
I'd
very
have
profitable.
trouble breathing at that altitude. My goodness, 4,000 meters. That's 12,000
Yeah,
feet.
yeah. Up there, you do need to make oxygen choices. No,
I
yeah,
pant at 10,000 and I climbed Mount Etna last month and I got to 7,500 feet and I thought that's enough.
yeah.
But Paul, thank you very much for joining us and putting that project on the table. It's very interesting and very highly qualified, not only from the past people involved, companies involved, but also the work that you're doing now. And we look forward very much to the next update from Flagship.
Excellent. I'm looking forward to it, Tim. It's fantastic. We're in a really good position.
Thank you, sir.
Cheers.